Hello, traders. It's Wednesday, the 20th of March, 2019. We're about two-thirds of the way through the month of March already. Thanks for joining me again. It's 8:02 a.m. Chicago time on what is a warmer but rainy day. Very dark outside today as opposed to the prior days, but you're not here for the weather report. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning is risk off following the sell off that happened into the close yesterday. So risk off sentiment this morning. The DAX is off 1.58%, 186 points currently, followed by the Euro stocks down 28 points, 0.84%. The cable's also down about 83 basis points or 111 pips, and crude oil's off 81 basis points. Crude gets its inventory report today at 10:30. The leader this morning is the U.S. bond, up 15 ticks. The futures are up 15 ticks, or up 32 basis points. The 10 years follow that with 5.5 ticks or 11 ticks, whichever way you go. And gold trading at 1308.10. So clearly risk off. The low overnight coincided with the low of Monday session. The high overnight coincided with the key area, which was yesterday, which was 28.43.42 in the ES. So the market's still trading in a pretty orderly way. Of course, yesterday the whole thing was kind of disrupted by that news that was posted on the China U.S. negotiations. Really not that China's walking back some of the agreement that they've made. And the market didn't take too well to that, dropped quickly and came right back up. But let's take a look at what we expected. But first, let's discuss for a second what's expected for today. Today, we did get some releases. The inflation rate in Britain came across. It's a little bit higher, 1.9% versus 1.8. And we're expecting EIA gasoline and crude oil inventories at 10:30. But the big one today is the Fed. The Fed rate decision is expected at 2 p.m. Eastern, expecting a hold at 2.5%, likely to be a fairly sluggish session today. So just be aware that the market's going to be waiting for this, and at that time, we'll see some volatility as the market responds. Now, the Fed has telegraphed what it's doing. There have been a couple of speeches from Fed President Powell since the last adjustment, and it seems like there would be no surprises. So the market, the bigger participants, are going to be sticklers for what wording is used. So that's where we are. Let's take a look at what we expected yesterday versus what we got. Yesterday, we're opening in a gap up, and the expectation is that the market's likely to hold a gap open. The gap mid turned out to be around 28.45.50, 28.45.75. The expectation is that it would not go down and test the 28.43 area, which was the high of Monday's session, and it's likely to test the key 28.58 area. 28.58.59 is really important from October 10th. If you go back to October 10th and you have a volume profile, you'll be able to see the obvious key area that's defined there by that stock zone where I show it struggling here. So that was basically the top. Here's what the market actually did. Excuse me. Here's what the market actually did. Let's compress that a little bit, compress the scale a little bit. We have an open auction out of range. Market expands that open auction by a tick up and then drops down, and we get this rotation down into the gap mid area. Remember, it was 45.50, 45.75, and then we get this push to this key area above the 58.59. Again, I encourage you to go back and look at your template days. You know, when the market's trading outside of the range of the most recent auctions, it's really important to go back at least on a 15, 30, 60-minute chart. Go back and see what we did the last time we were here. Once it tests this area up here, we get a drop down, and then we get the China news. Boom, the China news brings us down to 46.75. A little consolidation, little zipper action near the low. So at this point, we were already neutral, right? We took out the low, then we took out the high, so we were neutral on the session, and then it goes and breaks the neutral low again. The initial break breaks it down and goes right to the prior day's high by a tick. 41.50 is the prior high, goes down to 41.25, and then pops right back up to the IB. Beautiful, beautiful day type levels there being respected, higher low, and then pushes back to the mid and gets tangled up in here on what is a profile that has a pretty good taper at the top, and at the time it had a really good taper at the bottom as well. The profile actually looked like this. At this point, once we tested, this is what the profile looked like. Let me change the shading on this so it'll be more obvious. Look at that profile, just beautiful. The weight in the center, good taper at the bottom, decent taper at the top, and the market was, we were trading right back in the middle of it. The market was completely imbalanced, having tested symmetrically above and below the IB and settling in the middle. We had our trade talk yesterday, our weekly trade talk at Convergent on Tuesdays. It's at 1 p.m. Eastern. And at that time, the market was right in here during the trade talk, 12 o'clock Central, 1 o'clock Eastern. And I warned everybody that this is a dangerous area to trade because it is consolidating right on top of the point of control mid in the mid at the time, inside of the opening swing. On top of the open, there was just, you know, on top of the, right around the overnight point of control area. So we're looking for a strong move away from this area. My suspicion was to the upside, since the scene of the crime of the news had not been retested at 28.52.75, and it held the prior day's high. My expectation was for it to push, for the impulse, the next impulse to be to the top side, to retest that 58 area, and it ended up slipping down, retesting, and then falling back into into Monday's range. Very interesting trading yesterday. The market seems to, the participants in here seem to be allowing for a natural auction, which is nice to see and is very welcome. An interesting anomaly here, this run up. So what we had up to the news, we had scenario one on the nose. We were looking for, here's scenario one, right? Pull back to about mid of the gap, go up to whatever, 58, 59, pull back and potentially attempt to push through. That's what I was looking for on scenario one. And then the news came along right in here and kind of blew that up. Potentially that could be the reason, but nobody knows. But on the close, we get this rotation here from 32 to 40, 8 points on what was a tremendous amount of delta, buying delta, just very bizarre there. there was I just don't see it's not expiration or anything. There was just a ton of delta, positive delta coming in, a lot of lifting from about negative 8,000 to about positive 15,000 on that 8 point rotation. There's quite a bit of buying into the close, which I found pretty odd going into the end of the session. So that was what we saw yesterday. Here's the overnight. The overnight, once we popped up, we just let it drift down. We end up taking out this low. So what we have here is a news-based right there, a news-based move that gets taken back. Then the market walks it back, goes and retests that bottom off the news, pulls back to mid, breaks into the prior range, and then closes, almost pulls back to that high, which would have been really beautiful, almost like something out of a textbook, pulls right back to the high on the close right here, and then ends up closing in the 28.36. And then we reopen and test that low. We put in at 29. We test it by 4 ticks, and then just go sideways until the European Open right in here. The Europeans come in, take it up for a little bit until about 4 Eastern, 4:30 Eastern, and then we pull it right back to the mid VWAP point of control. And for now, we're just holding steady on top. So the overnight session had pretty good volume, and it's trading right on top of its point of control mid yesterday's close, VWAP, the overnight open. It's just a lot of stuff in this area, and it's the overnight session is really finishing in a neutral stance. Bringing us into today's session. So I'm expecting chop on the open. So what are we looking for in terms of today? I should really remove these stock zones when I do these, but I keep forgetting. So what are we looking for today? This morning, I'm looking for an open auction in a range, right? It's out of value currently. And I'm looking for a responsive buying spree into that 41 area, that stock zone right there, and the kilo volume node right here. I'm looking for a response to this area, and then it's hard to tell if it's likely to push down or if it's likely to push up. So the primary scenario is it tests up there, comes back, holds steady in here until we get the FOMC at 1 Central, 2 Eastern, right? So we get the F, I'll just say F. I don't want to write all that out. The secondary, so that's the primary scenario, and then from there, who knows? From there, it's probably likely to be, to go with a context of the trend, it's likely to push towards that 58 again. The secondary scenario is basically the same, a test up that ultimately ends up pushing back towards value, so it's responsive and carries us into this 2850 area to consolidate before the FOMC, and then from there, who knows? I'd be a liar if I could tell you which way the market's going to go after the FOMC, and that would be scenario 2. Scenario 2 is completely responsive, and that brings us to scenario 3. Scenario 3 is looking initiative down, so open auction that tests up and then drives down towards the low, the overnight low, and then exceeds that low and starts moving towards 2816 is the target for scenario 3. Okay, so scenario 3 is looking for the 16s down here. And this action yesterday, the neutral, the test of the big area, 2858, had we not had the FOMC today, or had we not, if we weren't having the FOMC today, I would look at this as a pretty decent topping behavior with a almost a neutral extreme close, neutral extreme down. Therefore, starting to show weakness, and I would expect the rotation to continue. My primary scenario under those circumstances would actually be a test up into 41 and a push down into 16, which is now scenario 3 because we have the FOMC and it's kind of it's really difficult to predict what the market's likely to do. But 16 is going to be key here. If we look at the volume scope, if we look at the volume scope and the market's starting to push higher and I see it lifting with no, so I'm seeing big prints lifting, a lot of green there on the footprint or the volume scope, and I see that it's just not gaining any ground. That'll be an area for me where I could easily define risk, short risk, with a couple of points and an aim for it to return back through the 28, 35, 36 area, and then start looking for 28.16 in the long range. So it's going to be very, very um, important to watch as the market pushes higher if it's able to gain ground easily like it's done for the last week or so, a couple weeks, or if it's really fought all the way up. The opening type will tell us what to expect initially, and then we can lay into it once that happens. So those are the main scenarios. I want to remind you again. Yet again, tomorrow we'll have Ira Harris, a global macro trader, an active global macro trader, 42 years experience. We're going to have him on for our trader spotlight to commemorate or to celebrate our first year at Convergent Trading. And he'll be talking about we'll spend some time on his background, and then really the emphasis is going to be on how he sees the big picture and how he positions himself and his trades to respond to global macro inputs. Please register. The link is on in the description of the YouTube video, and it is right here. Go to ct.pro/032019, 032019, IRA with a capital Y. Thanks for joining, and I'll talk to you soon. Take care.